Alright, good afternoon, guys, and welcome to the Great Trading Academy channel once again. With the intent of liberating a lot of people from poverty through trading, of course. And today we'll be discussing on selecting a valid order block. And there are three criteria that now I'm trying my best to be very brief. I like to keep my video as brief as possible. So there are three criteria that makes up for a valid order block. The three criteria that makes up a valid order block. And the first is 1. It must correspond with the current market structure. 2. Must have an imbalance. I believe most of you know what an imbalance is by now. An imbalance is a space between two candles caused by an aggressive movement in price. And 3. It must have liquidity. So with my drawings, I'll be showing you guys what a valid order block would look like. So just take out my drawing tool and I'll come here and do this. So this was okay. Let's use a bullish scenario. Okay, let's say price was doing this. Price was bullish, and this was its recent high, and it went out of its way and took price at broke structure to the higher side. Then it came down, did something like this, met with a supply zone, came down here again, probably met with an internal demand zone, then did something like this again, met with a supply zone, and then came down, did an inducement, took out the liquidity, and boom, went our way. So this is what I'm showing you guys how to select a valid order block. And let's assume this is our supposed order block. This is our supposed order block. With this drawing, I'll be showing you guys the three criteria needed for selecting a valid order block. So initially, the first was it must correspond with the current market structure. It must be doing two things. It's either it breaks structure or it change character. So this is it. Price was in an uptrend. Price came at this recent higher high. Price went ahead to break the structure. So at this point, we knew that price was coming back for a reversal. Price was coming for a reversal, and it will head after coming to the other block. It will go to break structure again. So that was it. Just indicate there that is a break of structure, and that is the first criteria. It must correspond with the current market structure, which it did. It broke structure. Secondly, it must have an imbalance. This is a drawing, of course, so I cannot show you guys an imbalance here, but let's assume this is a level of imbalance. An imbalance, like I've said before, is a space between two candles caused by an aggressive movement in price. Let's assume this is an imbalance at this level. An imbalance just before our order block, which is our confirmation. Let's leave it at that. And thirdly, it must have a liquidity to take on its way to our order block or our point of interest, which is this, a liquidity in form of a trend line. I'll be teaching you guys, probably I'll do a video on liquidity, and I'll show you guys some types of liquidity or some forms of liquidity. So this is it. This is what a valid order block look like. It possessed the three criteria. First of all, it corresponded with the current market structure, which was a break of structure to the upside. Then second of all, it built a level of imbalance, had a nice level of imbalance. Then thirdly, it had liquidity just before our point of interest. So these are the kind of setup you should be looking for in 2024. This should be the kind of setup you should be looking for to take in 2024. This are what I call a setup. So let's head on to the chart. No, we're heading there too soon. I'll show you guys what a failed order block looks like when it does not meet the first criteria. I'll be showing you guys with my drawing what a failed order block look like. This is it. Let's assume price was bullish and price met a demand zone. Yes, somewhere price met a demand zone, then it went up on its way up. It left a valid a very valid demand zone. As it was going up, it didn't break. We were expecting price to break structure, but because price left an order block that seemed valid, because let's say let's say it had the second criteria, which was it must have an imbalance. There was an imbalance there, and price did something like this. It didn't take out the high, the recent high, which we were expecting it to do. Then it came here, formed an area of liquidity. At this point, some traders are like, yeah, that is a valid order block, without checking if price broke structure before doing that. Then price comes in directly into our order block, gives off a little reaction, and then boom, takes us out. And a lot of you might be asking, why didn't price why didn't price do what I was expecting? After all, the order block is valid. It had a nice level of liquidity and also had an imbalance. So why didn't price go my way? But unfortunately, you failed to check the market structure, the current market structure, to know if it was bearish or if it was changing character. So this was it. Let's assume price came here, met with a supply zone, and then started heading down. This was it. It's this trade here, this other block, it had two criteria, which were imbalance, a nice level of imbalance, and liquidity in form of a wick just before the point of interest. This is it, a liquidity just before the point of interest, and price comes into our our other block, gives off a little reaction, and then boom, takes us out. So I'll be showing you guys on the chart what that looks like. Let's quickly head on to the charts, showing you guys what it looks like. So this is it here. The order block marked with the X sign is a failed order block, and the order block marked with the good sign is a good order block, a successful order block. So this is it. So this was price in a downtrend, but a lot of traders would see this order block, this nice order block, which possesses the two criteria, just like I've shown you guys in the drawing. First of all, it possessed an imbalance, and it had some nice level of liquidity. If you go down to the internal or the lower time frame, you see a nice level of liquidity just before that order block. So a lot of traders, without checking, without bothering to check the current market structure, they will just enter off this order block because it has met two criteria needed for a valid order block. And so some traders will take out their long position and set a buy limit, and price came directly into our order block, gives off a very little reaction, and then boom, ends up hitting the stop loss. And they will be like, okay, probably it was a mistake or something. We go again, and price comes down here, gives off an internal change of character without, and they will be like, okay, yeah, this is a valid order block since price changed character here, and they won't bother checking the external time frame for confirmation to check the current trend. And this other block seems very, very tempting. It has the two criteria, and it's very, very obvious. First of all, an imbalance, a very nice level of imbalance, and liquidity just before the other block. And they try again. They come here, they set their buy limit, and price comes down, gives up the same little reaction, and then takes them out. At this point, probably they get to realize, they don't get to realize. But if they get to realize, that's a good thing. They get to realize that price is in the downtrend. They have been ignoring the first criteria, which is price must correspond with the current market structure. So price comes here. At this point, they check and they notice that price is in the downtrend, and now at this point they want to be shorting only. They want to be selling. So once price takes them out, they notice that this is a break of structure. And after they've seen that this is a break of structure, they come here, select an order block, which and this time they're mindful of the three criteria which this order block met, which is why it was successful. First of all, it broke structure. It must correspond with the current market structure. That's the first criteria. Secondly, it must have a nice level of liquidity. A nice level of imbalance, which is this. And thirdly, it must have a nice level of liquidity, which is this liquidity in form of a wick. And price, after creating the liquidity, it came here, took it out, and started heading downwards. Originally, I'm supposed to target just this low for my take profit level, but because of because this person had taken so much loss, we started to make it a 1:7 to recover from the losses. So price came here again. This time he's following he's following the trend, and he's taking it beautifully. Price came here again, broke structure, and he selects the end of this imbalance as as his entry level. And price also built a nice level of liquidity, meeting the three criteria: a break of structure, an imbalance, and liquidity just before our PY. Price came here, broke structure again, the same the same process. Came here, broke structure. As you can see, this is an imbalance. The space between two candles, this candle and this candle didn't meet, and it also left a nice level of liquidity just before our order block. And price came here, we took our entry off the end of this imbalance, and price came here, filled it immediately, and started heading down. Price is always bound to fill imbalances. This is one thing you must understand as a smart money trader. Price is always bound to fill imbalances, and price started heading downwards. And at this point, price came here, broke structure. Yes, it's a break of structure. Had it been because this close with the body, yeah, it's close with the body. Had it been this week was somewhere down here, I wouldn't have counted this as a break of structure, because it's close with a week here. So for the fact that it's close with the body, we can say this is a break of structure. So we came here, we selected this as our order block. If you notice that I use this blue sign, the reverse sign. I use the reverse sign for an indication that price didn't get to our order block, and it started reversing. Why I use this as my order block was I was expecting price to fill the end of this imbalance before reversing. This is how we get our sniper trades. We always target the end of the imbalance as our entry level. So that's a good tip I just gave you guys now. And price came here. I don't know why I didn't feel it. Probably I didn't set my my buy position well, or something like that. Price came here, it's heading down in our position. It's heading down in our take profit, which is really unfortunate. So that's it, guys. And what else? What do I need to address? About my mentorship program. Like I told you guys before, I'm doing a promo. I'm on a promo, and with a discount of 30%. Instead of paying $50, you get to pay $20. And this promo ends on the 26th. That is tomorrow, I believe. And after that, it returns to its original price, which is $50. And the official ending for paying for the mentorship is on the 1st of January, and the class kicks off on the 5th of January. In that mentorship program, I'll also be teaching you guys different things, imbalances, more in-depth course on selecting a valid order block, and and the rest. Also be teaching you guys risk management and psychology on trading. So that's just it. So if you like this video, I would like you to like, subscribe, and share so that your friends can also learn from this. Thank you for joining us.